Hi, I'm Apurva Sheth and I welcome you to this latest edition of Fast Profits Daily. Now, over the last few weeks, I've been talking about intraday trading. Now, these videos have gained a lot of popularity and our viewers have liked them. So, we will continue this series of trading on an intraday basis and what all things one should look or keep in mind while day trading. So today we will take this one step forward. Now, in my last videos, we spoke about in the first video we spoke about time frame that one should use for trading. So we took an example of a swing trader and how he could move from a daily time frame to a weekly time frame, and then back to a smaller degree time frame like an intraday chart. Now, for this goes the process is same for a day trader as well. But here, what I recommend or what I prefer to use is a 15-minute chart, and for confirmation, one should use a 75-minute time frame, which divides the day into five equal candles. And for entries, one could use a 3-minute time frame for better entries basically. So now if one does not have a 75-minute chart on the platform, then one could use a 25-minute or a 60-minute time frame. We also saw what kind of indicators one should use in our last videos. So on a daily time frame, on a 15-minute chart, one could use ADX indicator. On a 75-minute chart, one could use MACD to determine the trend, MACD and moving average to determine the trend. And on the lower degree time frame, that is the 3-minute time frame, one could use the RSI for better entries and exits. So one could enter when the RSI is in one could enter longs when RSI is in oversold levels, and one could enter shorts when the RSI is in overbought levels. So this is with respect to the day trading system or process that one could follow. Now, another challenge in day trading is the kind of stocks that one should select. So now today's video is all about that. How should one pick stocks for day trading? What are the best stocks that one could use for day trading? So now there are about 4,000 stocks listed on the Bombay Stock Exchange. Now, as per the system which I told you, now if one were to follow that system on these 4,000 stocks, it would have been simply impossible to trade, because you have to see 4,000 stocks on three different time frames. So that would make it very difficult given the time span that we have for trading. So we need to reduce the universe drastically. So how would one go about reducing this universe? So I'm sure you might be aware that most of these out of these 4,000 stocks, most of them may not be that liquid. So some of them might also be in T2T group, so wherein day trading is not allowed. So uh, by we should be using the process of elimination to select the best stocks. Now we use this technique in our competitive entrance exams, wherein we were taught that if you don't know the correct answer, or if you want to improve your probability of picking the right answer, you should first uh, eliminate the wrong answers. That makes the process of selection of the right answer easier. The same process is applied to day trading as well. When we are picking stocks for day trading, you should eliminate the stocks that you simply do not want to trade. That makes your life much easier as a day trader. So, out of these 4,000 stocks, you should eliminate what I recommend is eliminate the stocks wherein the average daily turnover is less than 4 crore rupees. So now some might not, everyone may not be able to do this, because it requires some computing power or charting software. So if you do not have this kind of tool, a simpler way is to pick only the CNX 500 stocks for swing or day trading. Now, that's the rule that I follow. I do not generally recommend stocks out of the CNX 500 universe. And I think that that is what each and every trader should follow, because the stocks which are outside of the CNX 500 basket are not quite liquid and do not have good volumes, and they might also be operator driven. So because of all this, we should eliminate these stocks. Now, even out of this CNX 500 stocks, most of them do not move on a day-to-day basis. There will be periods when they will be stagnant and will be consolidating, so you won't be able to trade them on an intraday basis. So what's the best approach for that? So ideally, what one could do is pick only the stocks which are in the FNO segment. Now, the FNO segment is the most liquid segment to trade. So there are roughly 142 stocks and two indices, Bank Nifty and Nifty. Now, this is the most liquid universe, wherein you have the advantage of leverage as well in your favor. So you can trade these 142 stocks in the cash segment if you are slightly conservative trader, and if you are willing to take risk, then you could also trade these stocks in the FNO segment. Now, even with this 142 stocks which are there in the FNO segment, most of them are not liquid. So, I would say almost half of them are not liquid enough. Now, what is the measure of liquidity for these stocks? So, the rule which I follow is that these stocks should have traded at least 3,000 contracts on any given day in the FNO segment. So these 3,000 contracts are for the near month futures. So what is the logic behind using 3,000 contracts? So there are 375 minutes in a day. Now, if you divide 307, if you divide 3,000 by 375, you will get eight contracts per minute. So what we are essentially looking at is that if a stock does not even trade eight contracts in 1 minute, then it is not very liquid, and the bid ask spread in these stocks would be very high. So it wouldn't make sense for a day trader to trade such kind of stocks, because the bid ask spread or the impact cost would be high, and you need quick entries and quick exits in day trading, especially when there is a lot of volatility and there is news flow. You don't want to get stuck just because your price is not filled. So that's why one what I recommend, or what I would use, is a limit of 3,000 contracts traded per day. Now you could calculate an average over a period of 2 or 3 days to see how liquid a particular stock is. So if you apply this filter, then the universe would even reduce to, let's say, about 70 to 80, 85 stocks. Now this is the most liquid universe of the end of the all the stocks that are listed on the BSE or NSE. And I would suggest that day traders, especially day traders, should not go beyond this liquid universe, because you have to check these stocks on 2 or 3 time frames for confirmation and for entries and exits. So you would be checking, let's say, 80 into 3, 240 charts, which will be have to keep on seeing during the day. Or for some people who do who trade on a, so you would be checking 240 stocks in a day, and more, see, more and something. So you would be checking 240 stocks in a day. Now, anything more than this would be very difficult to manage. So on the basis of this rule of elimination, you can narrow down your universe to 70 to 80 stocks, and these will be the most liquid, and the volumes will be very high in such stocks. So you could enter and exit frequently without much of a impact cost. So that's how day traders should go about picking the best stock. Now this time we have used the process of elimination to come down to 70 to 80 stocks. In the next video, I'll use the process of selection and tell you how one could identify the best trading opportunities within these 70 to 80 stocks. So that's all from me for today. I hope you enjoyed watching this video, and in case you did, then please like this video, share it with your friends and family who want to be better traders. You could also join our Telegram channel, where I keep on posting regular interesting stuff about market and how uh, one could identify the best trading opportunities for the next day on our Telegram channel. So don't miss out on that. Thanks a lot and have a nice day.
Also, don't forget to sign up to our free newsletter, the Fast Profits Daily. If you sign up to this newsletter right now, then you would get access to this free guide, how to trade the markets like a pro. So don't miss this chance and sign up right now.